$1 trillion in 2024 of commercial real estate maturities could lead to hundreds of bank failures. Welcome to How to Protect Your Assets Through Chaos, Conflict, and Crisis and Achieve Portfolio Performance. My name is Rob Napolitano. Today, we're going to take you through a couple of charts to show you how we got into the credit crisis on the commercial real estate side, what led to it, and what we see coming and where we're headed. Last week, I spoke about the $1.2 trillion in commercial real estate that's going to hit a maturity wall in the years 2024 to 2026. And almost half of that, $645 billion, is going to be in multifamily. So I'm going to, again, as I said, go through a couple of charts to show you where we are today in the cycle, what's coming, and where we're going to end up. But I want to tell you that the reason why you're here, and I do these insights every Tuesday to bring you more information that's based on data so that you can make informed decisions. Because it was back in 2008 that I got an inside look at how the real banking system works. And I realized that the average person like you and I are just people who are basically flying blind in investing today. What I'd found out in the 2008 crisis, after I went through Chapter 13 bankruptcy, went in at a certain net worth and came out at a higher net worth, one of the things that I realized is that you got to do it with a plan, a methodology, and a discipline. And that means getting educated, taking quick and decisive actions and decisions, and limiting your costs and your conflicts. So I felt that as I went through that I had a personal and professional responsibility to educate everybody out there by sharing some of the insights that I see today and cut through the noise and bring you facts backed by data to empower you to make more informed decisions about your portfolio and how you can thrive through chaos, conflict, and crisis. So I want to provide you with independent, verified facts so that you may proactively defend what's yours, your wealth, your legacy, because our wealth is holistically being attacked and encumbered with debt. Our freedom is being encumbered, and at an unprecedented rate, it is being attacked. This unconventional warfare leads to the destruction of wealth, destruction of family, and increased social unrest. So today's weapon of choice is really debt on the government level, the corporate level, and on the consumer level as well. And it creates a lot of noise. It creates a lot of confusion. It creates complexity. But with that, it also brings disruptions, inefficiencies, and misalignments. And within those things, there are substantial opportunities for those who are ready to seize those opportunities that are taking action and getting informed. So if you want to take advantage of these inefficiencies and these misalignments, I'll share that with you in the end. But for now, stick with me for the next 8 to 10 minutes. And at the end, I'll show you what your next step should be and how you can take advantage of some of these opportunities that are presenting themselves today. So remember, the most prepared always wins every time. So let's get into today's content of what we're going to show you here today. All right. So as I've said before, and I'll continue to do it again, that in order to avoid repeating mistakes, we have to study history. And in studying history, we've seen how these crises come along, and they're part of debt cycles. They're part of long-term and short-term debt cycles. We talk about this in our monthly interactive sessions, which I'll invite you to join us for this month's interactive session. I'll talk about that in the next couple of minutes, that we go through a crisis. And this one's going to start with commercial and regional banks. Then you're going to see unemployment increase, consumer defaults and bankruptcies rise, and then the residential housing crisis will start to develop as well. And we're starting to see inklings of all of that happening already. As I said, there's a $1 trillion in this year, in 2024, of commercial real estate maturities that could lead to hundreds of bank failures. Now, this is not me saying this. I pulled 3 headlines that came out this week from Fortress co-CEO, JP Morgan, and also Marathon CEO. They're predicting some of these things and having some outlook of what they see from being perched high on the institutional scale there. And Fortress sees commercial real estate stress leading to more bank failures, a $1 trillion opportunity emerging for investors, and about half of maturing commercial mortgage-backed securities are troubled. So looking at how these loans are packaged on the capital markets and issued as bonds, he sees half of them maturing are in trouble. So JP Morgan sees a big credit reckoning this year in 2024. with the rising interest rate burden, tightening policy, and low liquidity, those are all risks. And that's what we're seeing a lot of too. Not so much that it's the interest rate, it's the liquidity. This is a liquidity crisis that we're going through. We've been going through for a few years. That's what's going to really push this credit crisis through. And it's going to be a slow bleed. It's not going to be one that comes and goes quickly. It's going to be a slow developing and long-winded crisis that we're going to go through with this on the credit side. And then Marathon CEO, he predicts that the asset-based lending boom is going to take off as banks start to retreat from the traditional markets. And that's what we're seeing too. We're seeing a lot of private credit coming into the marketplace. We're seeing more private investors, big family offices coming in, filling the void, and looking at these as opportunities. As we're getting more and more inbound calls of clients and prospects coming in, we see the same theme over and over again, that they're looking to capitalize on these opportunities. Okay, so in the immediate aftermath of the SVB, Silicon Valley Bank collapse last year, right around this time, March of 2023, I want to show you this chart here. So as you can see along the chart there, towards the end where Silicon Valley Bank, the red line peaked, the red line are all the C&I loans with a year-over-year change, and the orange is the bank credit for a year-over-year change. And the key to take away from here is you can see in 2023, right before the beginning of the year, is right when it peaked out, where banks were at their peak in recent years post-pandemic for lending, for showing profitability, for putting money out on the street. And then right after SVB failed, you can see they all pulled back on all of their lending. We're getting to a point now where there's no growth. In fact, there's negative growth on the amount of loans that are being put out into the marketplace out there. And this chart will go along with it. You'll see here commercial real estate lending, and it talks about here as well that these are all of the banks in the orange, year-over-year change of how much commercial real estate lending they put out on the street. And right after 2022, the Fed Reserve started their campaign to march rates up. Okay, they were doing more and more real estate lending until they got to a point where Silicon Valley Bank collapsed. And again, they all pulled back, because what happened was that the Fed started raising interest rates, started changing the environment, and all of these hold-to-maturity securities that these banks had, there was a problem at the high interest rate environment. So they pulled back the Fed, they pulled back their interest rate hikes, and they started bringing the interest rates back down again to a level where they found that balance where interest rates can live at this higher elevated level. The banks can get their books in orders and get their affairs in orders. And this is part of the reason why we see the Fed going to be lowering rates a little more, because the banks did not have enough time to get their books and their house in order, the regional banks anyway. And so you're going to see, with more of a liquidity crisis, more of these banks are going to have problems as these commercial real estate loans are coming to maturity. In fact, here is a chart from Credit IQ through Bloomberg, where distressed commercial real estate loans inside of CLOs. The CLOs are collateralized loan obligations. These are also bonds that have been issued where loans, commercial loans, have been packed together in the capital markets. And as you can see, the distressed level of these CLOs has surged 480% in the last year. 480%, they've gone up in the distress level. This shows you exactly where we are in the cycle, in the market, where they're all coming to maturity here, and where the issues are coming in. But yet you'll have our leaders in the banking system saying there's nothing wrong, that the banking system can handle this, that it's manageable, and the banking system is still resilient. That's all we have for today. I wanted to continue by saying that, while we have a lot of chaos, conflict, and confusion and complexity, there is good news in that there is opportunity in this climate. But you have to be informed, not only to make the determination as to which deals are real, but also which deals are right. That comes with some insight and intelligence. And we're here every Tuesday to give you some clarity and confidence so that you can make those determinations as to what's right for you, so that you can protect your assets and grow your wealth. I put up a couple of lists here as well. If you want to get in touch and talk about your portfolio and how this can benefit you, get in touch.gritrust.com. We'll get you on our calendar so we can have a personal one-on-one call, not to upsell you on anything, but to see where you're at, how we can help you, because we wanted to get involved and we want to help you to get to reaching your goals in this environment. We also invite you to join our guest list, as we're going to have our next interactive session, our monthly session, the 28th, I believe it is, of March. We'll send some invites out there. You can come there too. Again, also, you can hit this right here, this video, plus all the other videos we've done in the past at vlog.gritrust.com. You can always capture this and replay this video there and all the ones that we've done before. I encourage you to reach out. We have some more insights and more education. It's time to take decisive action. Reach out. We want to hear from you. Part 2 is up to you to take the next steps. I wish all of you a prosperous and great day, and I will see you all next time. Thanks for stopping by.